And then we also added layers that makes it really safe for charities at this early stage to get on board. So we underwrite the downside risk of Bitcoin for the charities. So they enjoy all of the upside of the Bitcoin and with no downside risk. So we underwrite that. We also have what's called like a hold more, earn more incentive program, where the more they build out their reserve, the more rewards that they unlock on a monthly basis.
Welcome to today's episode, where we explore how Bitcoin is reshaping the world of charitable giving. Join us as Ismael, founder and CEO of EverGive, shares his inspiring journey and groundbreaking vision to transform philanthropy through trust, innovation, and sustainability. As a reminder, this podcast is for educational purposes only. If you enjoy the content, please remember to follow, share, and leave us a comment. Thank you. Lynn and I are partners at Base Layer Advisors, where we use our network of venture capital partners and startup founders to connect investors with unique opportunities within the Bitcoin innovation space. Alongside this, we help startup founders with their growth and fundraising. Visit our website's advisory section to learn more. Welcome to Build with Bitcoin. I'm co-host Israel Munoz, joined with co-host Lynn Bairstow. Today, we have the great pleasure of welcoming Ismael, founder and CEO of EverGive. Ismael, welcome to the podcast.
Thank you for having me. Pleasure.
We're excited to get into today's conversation. So EverGive is rewiring the entire charity and philanthropy model. And that's, of course, going to be the focus of the conversation. However, we would love to get a little understanding of your background and kind of what drives you, Ismael. You've also raised over 100 million pounds, I believe, with two past ventures of yours in the charitable giving space. So maybe we can start there. What is it about the charitable giving sector itself that speaks so loudly to you? What got you into this?
Yeah, I mean, the charitable sector has always been a feature in my life, like to like varying kind of like degrees of intensity. Because I was born into scarcity, really coming from an immigrant background into the UK, with little more than like hope and kind of the parents' desire for us to have a better life. That kind of environment really kind of shaped how I kind of view the world. And so, after university, I had gone traveling for a bit, and also went out and built like a few startups. Some failed and some succeeded, pretty. So like got like good success. But throughout that period, on the side, I was doing kind of charitable ventures. And then when I got into building out tech solutions and becoming a lot more invested in how tech could be leveraged for social impact, that's when things really started to scale and then outgrew even our own expectations of what's possible. And so while I was building out my regular for-profit businesses, it was really fun to begin with, but then it very quickly became quite kind of soulless and quite hollow. And I was really enjoying kind of building out this social impact with just a group of friends on the side. And that's where it all really started. So just a genuine interest and like affinity with other people's suffering. And then also the skills that I was developing just in my own career and how I could kind of make the two meet.
And what about Bitcoin? Where does Bitcoin come into this? How were you introduced to that, and why has that become such a focus of what you're working on?
Yeah, so Bitcoin was an interesting one. So like my kind of foray into Bitcoin really came in 2-3 waves, like primarily two. The first one was the co-founder and investor of a prior business, nothing to do with charity, was a retired hedge fund manager. And he had just gone deep down the Bitcoin rabbit hole. And he was like, look, we're generating like a lot of cash on this business. I'm going to invest some of it into this thing called Bitcoin. And I was like, okay, cool. I have no idea what you're doing, but I trust you. You've got this far in your career. I'll just continue building the wealth, and then you can just like actually grow it. So he was investing in Bitcoin back in 2015, So then I only saw it as a speculative asset. I understood it as a product guy. I understood the terminal supply of it and how that could be valuable given the right circumstances around it, like the socio-political circumstances. I could understand why a product like this would be valuable, but I didn't see it as anything more than this is going to help people just get richer. The real tipping point where I was excited about Bitcoin was after we had raised $100 million for charities. This was back in like 2019, 2020 onwards. So we'd raised over 100 million, and that was on a part-time basis. We weren't even taking it that seriously. It was something that just scaled and became a lot more successful than we anticipated. And we asked us, instead of feeling really prideful at that moment, we felt quite haunted by the fact that we had raised $100 million, pounds, in fact, and we couldn't really tangibly point to real impact. So we thought, like, the next 100 million that we raise, it can't feel as empty as this. Like, what is the impact that we're actually having on the world? And we started to ask ourselves much harder, more introspective, more philosophical questions about what are kind of like the structural causes of today's repression and poverty and suffering, etc. And why is it that we're raising, on aggregate, billions, if not like kind of trillions, for charity over the years, and things don't seem to be improving? I remember a lecturer of mine called Jason Hickel at university, an anthropologist. He's still quite kind of a prolific speaker on the scene at the moment, not a Bitcoiner, but just in the anthropological development world. He had given us a talk in one of our anthropology modules at the time, and written an article in The Guardian, in a famous paper in the UK, on how aid is done in reverse, where essentially we're told this big lie as a society that we, as kind of the rich OPEC countries, are funding and benevolently and charitably supporting the poor, or like the global south, the developing world, however you might want to kind of define those countries. And he was just exposing the lie of what we've been told all these years, and uncovered through really comprehensive research studies from like the Global Financial Integrity think tanks in the US and Norway, that if you look at the net flow of funds from kind of Western institutions to the global south, and then flows from the global south back to Western institutions, there's actually a net surplus today, approximately of $5 trillion, that goes the wrong way, which is from the global south to kind of Western institutions, whether that's corporations, governments, IMF, etc. And I just found that really, really sickening. And it felt that something is just so deeply broken, and it's not real. So then I couldn't, in good faith, speak to the audience that we'd amassed over the years of, at this point, 300,000 donors. We were telling them that donate to this platform, and together we're making the world a better place. I couldn't, in good faith, continue to say that, because I wasn't sure. I was very conflicted that the money that we were sending for a food pack here, or like to build a well over there, I was worried that we are just further entrenching a system that's designed to keep the global south down. And we had understood that the real solution, or at least a key part of the solution, has to be to restore a safe and equitable and sovereign base layer where these people could peacefully opt out and extricate themselves from a monetary system that's oppressive and designed to keep them in what can we uncover to be debt slavery, and a kind of reconfiguration of colonial and imperialist kind of ambitions and goals.
Build with Bitcoin is a proud affiliate partner of River. River is a financial services company that allows you to purchase, sell, and transfer your Bitcoin all through a great suite of products, high security standards, and as of recent, even allowing you to earn a Bitcoin yield on your US dollar cash deposits. For a personalized onboarding experience, go to partner.river.com/buildwithbitcoin.
So then once we started to uncover that, and then we went down the rabbit hole of Alex Gladstein, and the Human Rights Foundation have put together some like fantastic literature on this. And that's when, so Jason Hickel, not a Bitcoiner, but as we were going down that rabbit hole, we discovered Alex Gladstein, and he is, as you guys know, a very kind of prolific Bitcoiner. And then that's when we started to be a bit more hopeful that, wow, there's actually a solution. Because on Jason Hickel, for all of the merits of his argument, we still felt that the future was very, very bleak. We were in a really dark place at this point. We felt hopeless that, okay, we've just uncovered a really sickening reality, but like we didn't feel like we had any solution that is actionable. And when we were going through Alex's literature, we felt like, oh my God, like I think this might just be our last hope. And that's when we became really excited about Bitcoin. Sorry, that's a long answer.
No. And, it's really interesting as you're talking, I'm thinking about your background, which Israel and I shared similar perspectives, but it's like coming from technology world where everything is so carefully measured. You have KPIs, you have metrics, this user growth, impact, revenue per whatever. But the charitable world really lacks those metrics. And it's like as you're raising this money for causes, it's like, what is the impact and what are the metrics that charities should be looking toward in order to determine how effective they really are? I mean, it's a great question to ask.
I mean, I think we were really fortunate because we were at this intersection where we were in the charity sector, but we were at the periphery of it because we were building out our own kind of regular mainstream companies and e-commerce and general tech companies. And we were doing this out of kind of passion and a willingness to see tech leverage social good. And so we were applying a lot of the kind of like entrepreneurial rigor to the space. And that's what probably enabled us to look at it through slightly different lens and ask us the hard questions that led us to the answer that we are no longer willing to make more money for charity. Now it's about making the right money, which is Bitcoin in our view.
You mentioned, Ismael, something that I think probably resonates with anyone who has been studying Bitcoin, enough. It's easy to grasp, but not easy to understand, which you summarized basically as we have this massive problem where the impact isn't actually felt. And at a global scale, I mean, just putting it in simple terms, you have, all these trillions sloshing around and, global leaders talking about financial inclusion and all this stuff. But the reality is quite different, right? So there's just very intuitively something very off there, right? And a lot of it, of course, leads us to the money, to the misaligned incentives and all that. But why is it specifically that you mentioned it was so hard for you to measure the impact of that 100 million that you had raised? I mean, can you help the listener understand that disconnect there?
Yeah, absolutely. Because things just weren't getting better, right? So then that led us down a kind of an investigative path. I'll give you an example of Ghana. So Ghana, we had like several campaigns to try to help malaria. So Ghana is one of like the top countries that are affected by malaria in the world. So any kind of small contributions that we could make there didn't seem to make a dent. And then we were looking at global initiative, like the Gates Foundation are in that part of the world trying to fix this problem, but it doesn't, and it's seemingly a tractable problem, but doesn't seem like there's much progress being made there. And then when you kind of pull that thread and kind of unmask kind of the role of money and loans and kind of the financial colonialism component of it, then you realize, okay, cool, like it makes complete sense now. Ghana isn't able to even invest in their own public health because in 2019, for instance, they were only able to spend $1 billion on their own public health, but in that same year, they spent $4 billion on the interest payments to the IMF. So, so we were like, this is an absolute scam, and we're not involved in it anymore. And we need to fix things at the fundamental base layer, and give these people their economic sovereignty. They don't need our kind of handouts. They need real money, and that will set them off on their own kind of path of freedom, so they can start to even imagine other freedoms beyond their own financial ones.
Similar to El Salvador as a country too, just trying to kind of get out from under the shackles of the IMF. And I do want to highlight, you mentioned Alex Gladstein, who we know and respect. He's like a hero of mine, but the book Hidden Repression, I just want to give a shout out to that, because I think if you're not familiar with it, and he talks even about the story of how hard it was to uncover the documentation to support his thesis of the operation of the IMF, really supporting the growth of developed countries at the expense of the developing countries. And then you take it down, and you've also identified, I mean, there are inefficiencies in charitable organizations as they operate as well. I mean, can you speak a little bit about what a typical charitable organization goes through, what percentage they spend on attracting donations, and kind of the vicious cycle they go through that you identified as the problem that you're solving?
Yeah, absolutely. In terms of the percentage that they are spending on kind of administrative initiatives, etc., we can come to that. But I think that the bigger issues that are plaguing the charity world are no different to what's plaguing kind of society at large, which is this obsession and trap of high time preference and misaligned incentives, which, as you know, Bitcoin really speaks to very, very kind of directly and aggressively. And this is one thing that I wish that people generally would better appreciate about Bitcoin, that it's not just money or a tool. It's like kind of this civilizational and cultural shift in how you think and how you and build and the assumptions that society is even kind of predicated and based on. So charities are no different. So the high time preference just means that charities are stuck in this kind of perpetual cycle. They fundraise, donors give, charities spend, run out of money and ask for more money, and ad infinitum, and that cycle just repeats again and again. So donors are fatigued, charities are fatigued, and fundamentally that then leads to all these misaligned incentives where charities are no longer incentivized, or are less incentivized, to actually deliver impact and value to the end recipient, which is the beneficiary, and are more incentivized to impress the donor, who will then give them the money. So there's this kind of principal agent dilemma where the actual beneficiary, who's actually the customer just being served, doesn't really have much of a say in how the service is being managed. But the issue is, if the charities are constantly in this race to justify next year's donation ask, that what that therefore means is that they prioritize initiatives and projects which will yield very quick results, and then they can demonstrate that again to their donors, and therefore they're no longer seeking structural solutions to these kind of really complicated problems like that are really solved by long-term strategic thinking, and they are just constrained to short-term projects that deliver short-term impact, so then the donors can be impressed and give them. So then that cycle is, I think, leading to more lives lost as a result, because people are not having their fundamental kind of problems and grievances resolved, and it just leads to all sorts of other kind of downstream effects from that. And kind of the misaligned incentives is kind of as I've described above, which is the donor, the charity, and the beneficiary have completely misaligned incentives, and that causes fundraising activity that is not optimal for the donor. and therefore the impact is just isn't being felt. So then what Bitcoin allows us to do, if it shifts the culture and the mindset of the sector and kind of donors at large from short-term giving to long-term giving, you can already imagine that a charity will, if a charity relies less on donations and is more self-sufficient as a result of its Bitcoin reserve that hopefully is continuing to grow in value, then they are no longer anxious that they won't have enough funds to deliver on projects in year 1, year 2, year 3. So then all of a sudden their ambitions their time horizons start to lengthen, and they can actually start to work on long-term projects and feed back to donors real impact, real sustainable impact. And that will therefore excite donors more, and then hopefully lead to a much more kind of wholesome and healthier charity sector. But what's killing the charity sector at the moment is the high time preference of it, and just the absolutely misaligned incentives. That means charities are serving donors and not the beneficiaries.
Yeah, and you're really getting at the root difference between the fiat system and the Bitcoin system, right? I mean, I think the fiat monetary system is based on control mechanisms, and the Bitcoin monetary system is based on freedom mechanisms, which is why the dynamics of building long term are just so night and day between the two. And so you are mentioning, Ismael, that you essentially identified the problem being that there is this control mechanism, right? And misaligned incentives and all the inefficiencies that leads to. So you identified the problem, but I've heard you speak before to the fact that you guys evaluated the potential solution as being a variety of assets beyond Bitcoin, and you eventually landed on Bitcoin. Yeah. Can you speak to that? I guess that process of assessing what the right solution was after identifying the problem?
Yeah, I'm at risk of offending Bitcoiners here, but we don't actually care about Bitcoin. Like, we don't. We care about freedom, technology, and how do we build a more free world? And then all roads just happen to lead to Bitcoin. So what we tell people is that we weren't approaching this as Bitcoin purists, or really kind of from a very dogmatic perspective, but just from a conviction that this is the only asset that solves the problem that we're trying to solve. And therefore, that's why we are so convicted about Bitcoin. So we explored a number of different avenues, one being the main other two being real estate and gold. I think there needs to be an appreciation first that the time horizon, the asset that you choose is very much a function of kind of the time horizon that you're operating at. So what we're saying to our donors and our charities is that we want to make you financially secure forever, right? And so on a very long timeline, like 400 years, 500 years, all of a sudden you're going to be thinking very differently to investing in Amazon stock or Tesla or companies where statistically most fail within years, let alone decades. So within that framework, we thought, okay, cool. The only plausible contenders are real estate and gold. So firstly, with real estate, we eliminated that fairly quickly because we really wanted real estate to work, because people just intuitively understand it. And we're like, that's just going to make our life so easy. But the issue was the counterparty risk of real estate. And in 500 years' time, who knows who's going to own the real estate in central London or in Miami, etc. So we can't, with confidence and in good faith, tell our donors and our charities that, yeah, this asset will last forever. And it was a really bold claim of, like, how do you make something last forever? Like, what asset really underpins that claim? So with that counterparty risk, we were like, okay, cool, that's eliminated. And then we turned our attention to gold. And we're like, gold has to be a winner. Like, this won't fail us. This is 5,000 years of like culture and like and economics and money. And so this is gonna like save the day for us. But then we realized very quickly again that over a long enough period of time and at a certain scale, the custody fees will just erode the value of the gold. And then there's the issue about like kind of storing it and custodying the gold. Where do you custody it, and what are the vulnerabilities around that and around moving it, etc. And so we were like, I don't think that this is going to really fly. And I wrote an article about this on our blog. We also like took a very stark lesson from history, where aluminium was at one point the luxury of like emperors. Napoleon famously would feast his guests basically on aluminium utensils, and then his kind of second-rate guests would eat on like with gold utensils. And along with innovations in technology, aluminium went from the most precious and rare metals to things that we throw away with Coke cans, right? And so we were like, with enough innovation in technology, could, similar to aluminium, gold then be replicated in a lab? And then we discovered that actually is possible today, but it's just very, very expensive to do. So with the rate of kind of improvement of like artificial intelligence and whatnot, like that's an area of vulnerability that we just weren't comfortable with gold. And then that led us to Bitcoin and all of the criteria, the very strict criteria that we laid out. Bitcoin just satisfied all of them, and it was kind of backed by absolute raw, like kind of mathematical and terminal like logic. And we were like, this is it. And it wasn't, and it was a product that this wouldn't be possible. EverGive wouldn't be possible before Bitcoin. So then that's what's really striking for us.
I think that's a great segue into let's get a little bit more tactical about EverGive. I mean, we've talked about the problem that you're solving. We've talked about kind of the core asset behind it, but can you explain to us exactly how it functions and how you help charities think long-term and provide a long-term funding source?
Yeah, so EverGive in a nutshell is, you can think of it as a forever engine for generosity. So instead of charity being a leaky bucket, which it is today, like how do we build a financial backbone for charities that outlive political trends, donor fatigue, and economic shocks? Right. How do we build out that resilience? So then the problem, as we've kind of outlined earlier on, charities are relying on donations, and that skews all sorts of incentives. So the solution that we found was to take donor donations and charitable funding, investing that in Bitcoin and holding it in Bitcoin forever. And charities therefore, and then holding that on a Bitcoin reserve on behalf of charities. And then charities can benefit from that in two ways. One, they could take out a portion of the growth each year, a capped portion of the growth each year, but ideally they could borrow against it. And that will then enable them to hold on to the Bitcoin for much longer and benefit from the appreciation of it. So then what happens is that the charities now have a growing asset every year on their balance sheet, and that gives them the confidence to therefore go out and extend their time horizon and take on more ambitious goals to make the world a better place, knowing that they've got funding.
And you know, this mechanism you speak to is quite interesting, Ismael, because you're basically leaving the principle untouched to grow. And anyone who's familiar with the price appreciation and trajectory of Bitcoin knows that, as you speak to, on a longer time horizon, bears bigger fruit. What percentage of their charitable giving is coming through you guys and being held in Bitcoin?
We're still fairly kind of early on. So we've got about 30,000 donors who have contributed into the EverGive Bitcoin Reserve for various different charities. So our model is one of two. So charities can rely on us to build out their EverGive reserve for them. So we go out and we field this proposition to donors to get them into the reserve, or charities can integrate a widget. Think of it like you must have this in the US as well, with like airports or like supermarkets where there's an option to donate a portion of it to charity. So charities can integrate an EverGive widget of that same sort into their natural flow on their website. So when donors are checking out, they can add $5 or $10 to contribute towards the sustainability of that charity. So we ask the donors, would you like to make your donation sustainable, or would you like to make the mission of this particular charity sustainable for the long term? And then we see about 30% of donors opting in to say like the idea of that charity that they're already supporting lasting longer than it otherwise would have. So that way, with the widget, the charity can start to build out their own reserve, leveraging their own existing traffic, and they can also rely on us to go out there and solicit that interest for them too.
And then what about the technical implementation? Where are the funds held? Is it held through the charity, or is it held through EverGive? How do those mechanics look?
Yeah, this is an interesting question because when you're building out, especially with a new asset where custody is a big deal, and you're in the charity sector, so it's even more of a big deal. And transparency is key. And just building out Bitcoin just truly with the principles of Bitcoin rather than just seeing it as another asset. If you were to rewrite charity with Bitcoin principles, what would that look like? And that's the framework that we try to approach EverGive with. So we treat Bitcoin custody like nuclear material, like maximum redundancy, maximum security, with no single point of failure. So that's where we met. We were introduced to OnRamp, which is a multi-institutional custodian, and they offer all of these kind of redundancies of the thing that I really like about OnRamp is that they really take pride in restoring kind of faith and confidence in kind of Bitcoin custody, especially after the blunders of FTX and a few other exchanges. Like, how do we at least make sure that isn't kind of an attack vector on Bitcoin? So we custody all of our Bitcoin with OnRamp, and the way that multi-institutional custody works is that it's the keys are spread between 3 different institutions, and those institutions are spread kind of geographically, continentally, and so it just really adds a lot of redundancy and reduces your exposure of any kind of fraud or theft, etc. So then that's pretty key in terms of the custody side.
Okay, and so you've built out a very robust and solid savings mechanism for these charities, Ismael, and the benefits of that. I mean, you guys are quite young, so the benefits of that, the charities will only be exponentially feeling as the years go by. But in this initial phase, what feedback are you getting from some of these charities? I mean, how quick is it clicking for them? Are there maybe other unexpected benefits that you've come across?
Yeah, we really struggled at the outset to convince charities that this is a good idea. We were treated like radioactive, like waste to begin with, and shooed out the door many, many times. So then what we had done is, look, what's the path of least resistance? We've got 2 sides of the marketplace. We've got charities and we have donors. We think that donors are going to be easier to convince that this is a good idea. So we decided that we won't start with Bitcoin. We'll start with the problem in very, very simple terms that is offering the donor. And that problem was very simply, would you like your impact in the world to last forever? That's it. And so then their entry point was like, yeah, that's a pretty cool idea. And then they would read a bit more and discover kind of what the perfect asset that we're using to enable this thing, to enable kind of this ambition. And without any marketing, we had got very quickly over 20,000 people contribute to this fund. And a lot of them not Bitcoiners at all. They're here because they like the idea that their impact just doesn't stop, right? So then we went back with that traction to the charities and said, look, you might be pretty spooked out by this radioactive thing, but there's a whole load of donors here that are telling you this is how they want to give. And it's not about Bitcoin. It's about them wanting you to be around forever. So if that is a compelling proposition to you, ignore all of the jargon, just strip all of that away. This is what it enables. And then we also added layers that makes it really safe for charities at this early stage to get on board. So we underwrite the downside risk of Bitcoin for the charities. So they enjoy all of the upside of the Bitcoin and with no downside risk. So we underwrite that. We also have what's called like a hold more, earn more incentive program, where the more they build out their reserve, the more rewards that they unlock on a monthly basis. And the way that we do this is because we have a community around us of high net worth kind of donors and philanthropists who really believe in the mission that we're doing. So then they're pulling some capital together to enable these programs to and this kind of like risk reduction to exist. We're going to have to figure out a way to scale that for sure. But at this early stage, we're quite happy with how charities have responded, because it allows them to get into Bitcoin with very little risk and all the upside. And then we've been able to work with really kind of really proudly with some good partners like Amnesty International, BBC, Media Action, some really notable names who've seen the value in what we're doing, and how safe we've made it to come into the space.
Yeah, we were talking prior to the recording, but I expressed a charity that I've been working with for years, and they're in the process of raising a legacy, a permanent campaign for supporting a specific project that they have. But the education, I mean, are you guys helping at all with educating people who are less familiar with Bitcoin, those who believe it's still radioactive, and how do you get over that comfort level, the hurdle to do that, or what support is available to charities or the board members?
Yeah, absolutely. So education is a massive thing for us on two fronts, on the charity side, but also on the end recipient side. So we have a lot of people who donate directly to EverGive's kind of core mission, which is how do we promote, fund, and support circular Bitcoin economies around the world? Because what we don't want to do is money flowing into Bitcoin only for that to then be sold back into fiat, because then that just really undermines our mission. So so we have a target by the end of the year to fund and support 50 circular Bitcoin economies, where a Bitcoin is really starting to become a medium of exchange rather than just a store of value, because we really believe in that transition. So educating on that side is pretty challenging. Involves a lot of advocacy work and whatnot. And we're still in the very, very early stages, but we know that's such a central part of our mission. We're beginning that nonetheless at the moment. And then on the charity side, we've been blessed with some smaller charities and some large charities, but particularly the smaller ones who really understand what we're doing. Like Groundswell is an example here in the UK, and they're just so clued up about Bitcoin. And now they're helping us. So we'll be doing like a joint webinar where EverGive and Groundswell are collaborating to then teach other charities. So we're collaborating with other charities who already get it to kind of educate and teach other charities. But I find, to be honest, the most effective way to educate charities is through their donors. Like once their donors tell them, like, guys, like, either we're going to give to this thing with you or without you, that's a much more effective educator than a webinar.
And then in terms of availability, do you run into any, where are your charities operating? Do you have any restrictions or regulatory issues in terms of what you can offer?
Yeah, loads. Regulators are not our.
It's a question we're used to asking this of like fintech startups, but I'm not even sure how the regulatory environment is when it comes to charitable giving. but I'm
Yeah,
sure there is one.
yeah. I was telling Israel in the UK, it's a lot more hostile than it is in the US. So we've definitely had our challenges, but that's made us a lot more kind of resilient. And also in an environment and a sector like this, especially when you're building out a Bitcoin company, we found that it's been quite advantageous to be under that kind of scrutiny and rigor. So that it really helps alleviate some of the kind of concerns that would have naturally emerged from kind of customers, clients, and whatnot. So we've definitely benefited from that, or that's just probably our kind of coping mechanism of just getting through it. But we operate in the UK, the US, Canada, Australia. So I mean, our dominant market so far has been the UK, but we've already started to make entries into the US and Canada, and we think that the US is probably going to be our if we don't relocate there permanently, it will definitely be a big feature in our kind of growth plans.
And Ismael, shifting a little bit to you guys as a company, as an organization, and how you've managed to get to where you are and where you need to be. I mean, how have you guys sustained yourselves? What was the fundraising journey for you, and what's the business model for EverGive? I mean, how do you guys actually monetize and stay afloat?
Yeah, the easier answer is our business model, and then I'll come to how we sustain ourselves. So so we take nothing of the donations, and our interest is a percentage. So we're still figuring out the final percentage, but it's likely to be in the region of 15 to 20% of the appreciation of the Bitcoin as a one-time fee. And then anything beyond that, the charity keeps for themselves forever. And that's it. So that's how we monetize. And so then the money even from the public doesn't even land in our account. So the money from the public goes directly to a donor advised fund, which I think is quite a popular term in the US as well. So it's like a third party regulated, you can think of it as an escrow account. So it goes from that escrow account to OnRamp, the multi-institutional custodian. So we're completely outside of the money flow. So as soon as the 20% appreciation is triggered, then there's kind of a release where that portion then comes to us. So that's our business model. And in terms of how we sustain ourselves, so I've built out several businesses to date. The only investment I've taken was from my co-founder, who was my co-founder in my earlier businesses, but is also now the co-founder with me in EverGive. So his name is Mohammed Yeshawat. So that's the only investment that I've ever taken. And it was different because he was also a co-founder. But since then, we haven't taken any investment, and we've just been big believers in just old-fashioned, how about you actually make something valuable and charge your customer type model. So that's what we've been doing for a number of years. But in particular with EverGive, we were quite fortunate to have sold our previous company, which was an e-commerce company, for a good sum. So we're using a lot of that, our own funding, to fund the early stages of EverGive.
Can you talk to us a little bit about your team, how you're structured? Are you remote or based in London? How are the operations run?
Yeah. So we are remote, but we're rethinking it. I think where we are, I think remote has its place for certain types of companies. But I think when you're building out something as fast moving as kind of the space that we're in now, and where you're really building out like really strong culture and mission, you really want to be, in our opinion, very closely kind of collaborate very closely together, and have just that bandwidth of communication that allows like really good ideas to flow and feedback to flow very quickly. So we started out hybrid, where we'd come to the office once or twice every month. Now shifting more towards in office, where we're again going back to our old fashioned roots.
your monetization model is sinking into me, but as it does, it's like, it's really beautiful because you're not taking anything as a percentage directly. And it's only on the appreciation, which just shows the conviction that what you're doing is really beneficial for the charity. And it's how your business succeeds too. So you're really values aligned, incentives aligned, that you wouldn't be suggesting this. It's like you're not taking anything until what you're projecting is actually is being achieved.
Yeah, it really comes back to like wearing, like putting it out there. And if you're going to espouse kind of Bitcoin principles, like live it and show it authentically in your own model. Yeah, if Bitcoin doesn't appreciate, we die on that hill, but it's a hill like, that we've got conviction in. And it's just clean for donors as well. And like you said, incentives of mine. And that was all really important for us.
Yeah, it speaks to the power of an decentralized open network, in my opinion. It's just this concept that each participant and node benefits the rest of the network, and especially in these early days, it's just so powerful once you open your eyes to it and you see it. But yeah, no, I love what you guys are working on and building, Ismael. And as far as, and you hinted a little bit to this, but as far as near to medium term roadmap for EverGive, I know you mentioned you're looking at new geographies, but any other features or things you're looking to add on the platform?
Yeah, the thing that I'm most excited about, validating more strongly, is this widget feature. And then proving that out in different environments and different types of charities, and seeing how much we can bring kind of the sustainability proposition to various different charities. So we have a fairly small sample size now, but I'm really excited about more charities coming on board and leveraging this technology and integrating the widget into their own website. And yeah, once we have enough kind of data points on that, we'd be really excited about trying to integrate that into every kind of charity, every airline, every supermarket, and getting just the whole world behind. Because with EverGive, it's not just about making kind of charity last forever or impact last forever. It's like philosophically for us, it's like, what responsibility do we have to the future? What responsibility do we have to future human beings who will exist and are no less important to us? Like, how do we manage that? How can we kind of demonstrate to them that, like, we thought about them in building out the infrastructure of society? So getting people behind that kind of initiative and that mindset really, really excites me.
Yeah, me too. I think everybody's so focused on like ETF inflows and things like this, but if we had a measurement that measured how much of Bitcoin daily cost averaging, or just small amounts that just go into a fund that helps support future conservation, water purity, health, education, what an amazing difference that could make.
Yeah, I mean, we had a design, like when we saw like the we actually had this idea a long time ago in 2020, but after the kind of the FTX thing happened, we're like, the world is not ready for a Bitcoin treasury for Bitcoin reserve for charities at all. So we parked that idea. And but yeah, it's when we saw kind of the flurry of more and more for-profit kind of Bitcoin treasuries surfacing, we were like, we can't allow the organizations who are invested in humanity's biggest problems to be priced out of this future. Right. So that's fundamentally what drove us to act now.
And the second and third order effects of this charitable giving concept that you're building out, Ismael, is so interesting, because as it plays out, it's just going to be so it's going to create so many positive synergies. I would imagine that many people, when you mentioned the supermarket example, there's I have no idea what the number is, but I'm sure it's a high percentage of people who don't click on donate because ultimately you have no idea. It's kind of a black hole, right? You have no idea if that's going to be properly managed, or you're aware of the misaligned incentives. So it creates almost, a disincentive, all this opaqueness and inefficiency to even give, right? So when you solve that simple equation, I would imagine even the activity in the philanthropic space will just grow as well. Yeah.
And you really hit go to the heart of what took us out of this really bleak, depressive state when we were looking for a solution post depression and more hopeful for humanity's future, is when you're trying to build out a fund that's designed to last forever. What are the things that have to be true? One of them is transparency. So then people can just see very clearly on the ledger, this is how much we have in our EverGive, in our Bitcoin reserve. This is how much has been deducted. And you wouldn't want it to be opaque for a fund that, you hope to grow and be kind of the financial backbone of this whole industry. You'd want that to be super, super transparent and outlive you in a way that has integrity. So for many, many different reasons, we tell people we genuinely mean it. We ended up with Bitcoin by elimination. This wasn't the first thing that we ran to. It's it just solves our problem.
Yeah, that's a really important point, because I think there's a part of the education process is there's this misconception that Bitcoin is vague and hidden and shady, and it couldn't be more wrong. It's incredibly transparent. You can track what's going on with it. And I think, to Israel's point of people don't know where money is going, I think the Doge Commission in the U.S. revealed, or at least, made people concerned that when you're giving to a treasury, or that there's a lot of missing dollars, or you don't know where money's going. And it did a disservice to the charitable world, because I think it caused hesitancy perhaps to make donations. But if there's a transparent way where you can track exactly where it's going, which is possible on the Bitcoin time chain, then you know exactly where your donations, how they're being used. So that's another super benefit of this technology.
And maybe as we wrap up, conscious of time here, Ismael, what words of advice, or what would you like to close on?
I think, well, in my own kind of journey, I found that when going into entrepreneurship, the biggest risk that people typically fear is failure. But I genuinely feel, and this has been the through line in my experiences, that the biggest risk is success without clarity. And what I mean by that is you'll underestimate the momentum that ostensible success, what kind of momentum that drives, and then how far along and how much time you spend on this path that you think is successful, only to be unclear about your principles and your actual goals and your values, to realize many years later on that you're working to build a version of the world that you actually hate. And you can tell this is my own personal experience coming out. And so what I would encourage entrepreneurs to do, if really entrepreneurship is about how do we serve humanity through this vehicle of business, or if that's what it's about, then be super clear on what your principles are and what kind of world you want to build, and what your values are. And then let that kind of guide your success, rather than subscribing to what might look successful optically. But Paul Graham has this really famous quote, which is make something people want. And then now, I would just advise entrepreneurs to also think about what you really want as well. And then at the intersection of those two things, that's where some real magic kind of emerges.
That's beautifully said. Ismael, thank you so much for your time and sharing your journey with us and your wisdom. And we couldn't be more excited about what EverGive is doing, and just the positive change we feel it has the potential to make in the world. So we appreciate you.
I really enjoyed this. Thank you, guys.
Thank you, Ismael. And where would you like to send people, by the way? Where can people get in touch?
Yeah, X or LinkedIn, both of those.
Great. We'll make sure to include them, and we certainly look forward also to keeping up with the progress, Ismael. Maybe we can do a check-in at a future date.
Yeah, when we leapfrog Michael Saylor, then we'll be back and let you guys know.
Perfect.
We'll look forward to that.